Very, very good morning to all of you, my friends. Welcome back. So, in the previous session, we started with marginal costing and we have discussed few concepts relating to marginal costing, wherein we discussed what is marginal cost, what is variable cost, fixed cost. Thereafter, the basic chart, that is sales minus variable cost, that is contribution minus fixed cost, that is profit. Further, we discussed PV ratio, that is contribution divided by sales into 100. Further, we discussed that if the question is silent, we'll assume that PV ratio is constant at all the level of sales. However, if there is any change in selling price per unit or variable cost per unit, yes, the PV ratio will change. Further, we discussed the concept of break-even sales, that is that level of sales where there is no profit, no loss, or we can say sales is equals to total cost. We discussed the various formulas also, and we discussed the concepts of the formulas, wherein we discussed that if you want to calculate break-even sales in rupees, the formula is fixed cost divided by PV ratio. Further, if you want to calculate it in units, it is fixed cost divided by contribution per unit. Thereafter, we discussed the concept of desired sales. Again, the concept, more or less, the concept is same, wherein the desired profit is given and you have to calculate the desired sales. When talking about the formula, what we discussed, it is fixed cost plus desired profit divided by PV ratio if you want to calculate it in rupees, and fixed cost plus desired profit divided by contribution per unit if you want to calculate it in units. So this is all what we have discussed till now. Now let's proceed further with the remaining part of the chapter. Be ready with your calculators. I hope you guys have revised the concept what I have discussed in the previous session, because I'll be putting up few questions in this session and I request you guys to please solve the questions. So very good morning everyone. Bhumika, Kiran, Ishan, Darshan, Komal, Manisha, Himanshu, Sushil and Sankaran. Very good morning Mr. Sundar. So let's start with again the next point, that is margin of safety. Or we can say safety margin. When talking about what is margin of safety, it shows that how much we are safe from deadline of the business. It says how much we are safe from deadline of business. When talking about the deadline, it is basically my break-even. So herein, let's say this is the deadline of the business. We call it as break-even sales. And let's say my break-even sales is 3,000. Now, herein, I'm standing here. That is called as my actual sales. So I'm standing here and my actual sales is 5,000. So how much safe I am? Very simple, guys, 2,000. So that is what we call as margin of safety. I repeat again, when talking about the concept of margin of safety, it says that how much we are safe from deadline of the business. So herein, let's say this is my deadline. So this is what we call as break-even sales. And here I'm standing. So that is my actual sales. So how much safe I am? Very simple, 2,000. So that is what we call as margin of safety. So herein, when talking about the formula for margin of safety, we can say it is actual sales minus break-evens. So when talking about the formula for margin of safety, it is actual sales and break-even sales. Actual sales minus break-even sales, that is the formula for margin of safety. One more formula is there, that is profit divided by PV ratio. One more formula is there, that is profit divided by PV ratio. Now let me discuss the concept of this formula. Now, as I told you, at break-even sales, we recover our fixed cost. Once we cross the break-even sales, we start earning profit. So at the end of the day, once we cross break-even sales, that is, we have recovered our fixed cost also. So once we cross break-even sales, so whatever the extra sales over and above break-even sales, from that sales we'll be getting, ultimately my contribution is equals to profit only. So once we recover our fixed cost, the extra contribution over and above fixed cost, what we are earning is what? Profit. So ultimately, let's say my actual sales is 5,000. My variable cost is, let's say, 3,000. Therefore, my contribution will be how much? 2,000. Further, let's say my fixed cost is 1,200. Therefore, my profit will be how much? 800. When talking about the PV ratio, it is fixed cost divided by contribution divided by sales into 100. So my PV ratio will be 2,000 divided by 5,000 into 100. That is 40%. Now, when talking about the break-even sales, again the formula we have discussed, that is, at break-even sales, the profit is what? 0. My fixed cost remains same, that is 1,200. So this will be 1,200. Now this 1,200 is equals to 40%. So how much will be 100%? Very simple, 3,000. So when talking about the formula, it is 1,200 divided by 40%, that is 3,000. So herein, at sales of 3,000, we are able to recover complete or fixed cost completely. So once the sales crosses the break-even sales, whatever the amount I am saving after recovery of variable cost, we call it as profit only. So once you cross break-even sales, so extra sales will be how much? 2,000. Further, 60% is my variable cost, it will be 1,200. So contribution will be how much? 800. Now my fixed cost is already recovered. So no fixed cost, so 800 is what? My profit. So what is profit actually? The extra contribution over and above fixed cost. So herein, my profit is 800 and my contribution will be equal to profit in case of margin of safety. So 800 divided by 40%, that is 2,000 is what? My margin of safety. So 800 is what actually? My profit plus 0 fixed cost is my desired contribution divided by PV ratio. So when talking about the formula for margin of safety, we can also say that profit plus 0 desired profit is equals to contribution. Contribution divided by PV ratio is what we call as the margin of safety. So at the end of the day, profit plus 0 fixed cost. So better not to write fixed cost. Profit divided by PV ratio is what we call as our margin of safety. So this is all what about margin of safety. If you guys have any doubts in margin of safety, you guys can please post your queries. So when talking about margin of safety, for the students who have joined a bit late, we have discussed the concept of margin of safety. When talking about margin of safety, it shows that how much we are saved from the deadline of the business When talking about the formula, again, the formula is very simple. We can easily derive the formula. Let's say here I'm standing. Sorry, here I'm standing, and this is my deadline. So how much safe I am? Very simple, guys. 2,000. That is what we call as margin of safety. So margin of safety is actual sales minus break-even sales. Further, one more formula is there, that is profit divided by PV ratio. How come this formula is derived? That once you cross break-even sales, that extra sales over and above break-even sales is what? My margin of safety. So from margin of safety, whatever the contribution we are getting, that is only profit. Yes, Darshan. Ishan, fixed cost is already recovered. That is 1,200 in break-even sales. I request you guys to please copy the explanation, giving you 2 minutes time. So if the actual sales is less than break-even sales, so see, this is my dead point. Agar isse kam gaya sales, so we call it as loss. So if there is loss, then there is no margin of safety. I hope, Arunima, your query is resolved. Ishan. Arunima. Any doubts, Arunima? Again, I'm telling you, this is the dead point, and here I'm standing. So how much safe I am, that shows the margin of safety. So 3,000 sales is my break-even sales, and my actual sales is 5,000. So how much safe I am from my dead point? Very simple, 2,000. That is what my margin of safety. And whatever the contribution we are getting from margin of safety will be profit. So that's why we can say profit plus zero fixed cost divided by PV ratio. We call it as the margin of safety. See, Bhumika, the concept is very simple. This is my total sales. Where in the sales where we are able to recover our total cost is what my break-even sales. So once the total cost is recovered, the extra sales what we are making over and above break-even sales will be getting profit. So as discussed, again, the same example, Let's say I'm the manufacturer of this pen, and this pen is manufactured at a variable cost of 8, and I'm selling this pen for rupees 10. How much I'm recovering? Rupees 2 per pen. So let's say my fixed cost is 1 lakh. So what will be my break-even sales? 50,000 pens. So it means at 50,000 pens, you are able to recover your fixed cost. So once the sales crosses 50,000, let's say my actual sales is 51,000. Over and above 50,000, how much sales I'm making? 1,000. So per pen I'm saying rupees 2 after recovering variable cost. So 2,000 is what my profit. That is 1,000 into 2, 2,000 is my profit, because my fixed cost is already recovered till the sales of 50,000. We call it as break-even sales. So over and above break-even sales, that 1,000 units extra is what? My margin of safety. No worries, Miss Jamila. Yes, Arunima, hopefully your query is resolved. So further we can say actual sales can be divided in two parts. Actual sales can be divided in two parts, that is break-even sales and margin of safety sales. So at break-even sales, we are able to recover our fixed cost, and once the fixed cost is recovered, the extra profit over and above extra sales what we are making over and above break-even sales, will be getting the profit only from that sales. So let's say if the break-even sales is 70%, sorry, let's say my break-even actual sales was 5,000. My break-even sales is 3,000. It means my margin of safety will be how much? 2,000. So this is 60% of total sales. So margin of safety will be what? 40%. So we can say actual sales can be divided in two parts. If 50% is break-even sales, then balance 50% will be margin of safety. If 70% is break-even sales, then better 30%. The remaining 30% will be what? Margin of safety. So let's summarize what we have discussed till now. Let's summarize what we have discussed till now. The first point what we discussed is PV ratio. When talking about the formula, it is contribution divided by sales into 100. The second point what we discussed was break-even sales. When talking about break-even sales, if you want to calculate in rupees, it is fixed cost divided by PV ratio. And if you want to calculate it in units, it is fixed cost divided by contribution per unit. The next concept what we discussed was desired sales, wherein if you want to calculate it in rupees, it is fixed cost plus my desired profit divided by PV ratio. When talking about if you want to calculate it in units, it is fixed cost plus desired profit divided by contribution per unit. Further, we discussed margin of safety. When talking about margin of safety, very simple. The formula is actual sales minus break-even sales, or we can say profit divided by Further, when talking about PV ratio remain constant at all the level of sales. However, if the question says, however, if there is any change in selling price per unit or variable cost per unit, then it will change. When talking about break-even sales, what is break-even sales? That is sales where there is no profit, no loss, or we can say sales is equals to total cost. Further, when talking about margin of safety sales, it says how much we are safe from deadline of. When talking about desired sales, it says sales to earn desired profit. So this is the summary of what we have discussed till now. I request you guys to please copy this summary and please revise what I have discussed till now. I'll be putting up few questions now. I'll be discussing 7 to 8 questions now. So I request you guys to please copy this explanation, do recall, revise what I have discussed, giving you 5 minutes time. Thereafter, we'll start with the practical questions. Anyone having any doubts? I'll be starting with the practical questions now. Thank you so much, Himanshu. So now it's the time to pay back. I'm done with all my hard work. Now I request you guys to be ready with your calculators. I'll be starting with the practical question. I'll be putting a few questions in front of you, and I want you guys to solve the questions. So let's start. First question. Let's say my sales is 2 lakh rupees. My variable cost is 1,50,000. My fixed cost is 20,000 rupees. Find PV ratio, break-even sales, and margin of safety sales. Waiting for your answers, guys. So the first question is sales is 2 lakh, variable cost is 1,50,000. My fixed cost is 20,000. So what will be my break-even sales, margin of safety, and PV ratio? So waiting for your answers. Okay, I've got answer from Himanshu and Darshan, and I think your answers are correct. Rest everyone waiting for your answer. Miss Jamila, Manisha. Okay, so Manisha, I think your answers are correct. Harshita, very good. All the answers are correct. Miss Miduna, correct. All the answers are correct. Very good. Okay, Diksha Agarwal, all the answers are correct. Sushil Kumar Barik, all the answers are correct. Ishan Bist, yes, all the answers are correct. Very good. Arunima, very good. Correct answer. Sudhanshu, very good. Correct answer. Bhumika, very good. Correct answer. Kavita, yes, very good. Correct answer. Waiting for your answer. Komal, Farah Sayyed, Mr. Sankaran, Miss Singh Rajiv Kumar, Hare Krishna Tiwari, Krishna, Miss Lata, Mr. Sundar, Kiran Shukla. Okay, so I've got answer from Rashmi Podar. Very good morning, Rashmi. Your answers are correct. Arunima Sinha, very good, correct answer. Khushi Gupta, good morning, my dear. Your answers are correct. Mr. Vishwanath Reddy, very good. Your answers are correct. So, everyone were able to solve the question. So herein, when talking about the solution, my sales is 2 lakh. My variable cost is 1,50,000. My contribution will be 50,000. Further, my fixed cost is given, that is 20,000. So my profit will be 30,000. So from examination point of view, you have to prepare the statement, and further you have to write the formula and then write the answer. So the first question what the examiner was asking is PV ratio, that is contribution divided by sales into 100. So my contribution is 50 divided by my sales, that is 2 lakh into 100. So this is 25%. The second question, what I was asking is break-even sales, wherein the formula is fixed cost divided by PV ratio. So my fixed cost is 20,000 divided by my PV ratio is 25%. So this will be 80,000. When talking about the margin of safety, it is profit divided by PV ratio, that is 30,000 divided by 25%, so 1,20,000. Again, from examination point of view, this is the correct way to present the solution in exam. वो जो reverse calculation मैंने आपको सिखाया था, it is only to learn the concept, this is not the correct way to present in exams. So when talking about how to present in exam, this is the correct way. All your answers are correct. Yes, Miss Noor Jamil. I think I've not received your answer. Okay, yes, I've got the answers. All the answers are correct. Very good, Mr. Sundar. Very good, Mr. Tiwari. Very good, Komal. Very good, Farah. So now let's start with the next question. Let's say my selling price per unit is 40. My variable cost per unit is, let's say, 30. Further, my fixed cost is, 1 second, guys. Let's say 12,90,000. You have to calculate break-even sales in rupees and units, and calculate the number of units to be sold to earn profit of 9 lakh rupees. Calculate the number of units to be sold to earn a profit of 9 lakh rupees. I repeat again, the selling price per unit is 40, the variable cost per unit is 30. Further, the fixed cost is 12,90,000. Calculate the break-even sales in rupees and in units. Further, calculate the number of units sold to earn a profit of rupees 9 lakh. Waiting for your answers. Okay, so I've got answer from Manisha. I think all your answers are correct. Again, I'm asking desired sales in units, not in rupees. See the question carefully, Manisha. So Himanshu, your break-even sales in rupees, I think it is correct. In units is also correct. And desired sales is also correct. So I've got correct answer from Himanshu and Noor Jamila. Further, Manisha, please check your answer. I'm asking desired sales in units, not in rupees. Okay, so I've got answer from Harshita. Very good, Harshita. Your answer is correct. And all the answers are correct. Arunima, correct answer. Manisha, correct answer. Miss Miduna, correct answer. Again, I'm asking this. Okay, so you have posted both the answers. No worries. Yes, waiting for your answers, guys. Darshan, waiting for your answer. Where are you, my dear? Okay, so Hetal Khatri, please check your answer. Your answers are incorrect, Hetal. Okay, so Darshan, I've got your answers and your answers are correct. Very good. Miss Miduna, correct answer. Manisha, correct answer. Arunima, correct answer. Waiting for your answers, guys. Komal, Farah. Both the answers are correct. Noor Jamila. Further, I'm asking for break-even sales in units also, my dear. Very good, Diksha. Correct answer. Very good, Ishan. Correct answer. Sushil Kumar Barik. I think your answers are correct. Very good. So, Mr. Reddy, waiting for your answer. Rashmi Podar, Mr. Sundar, Khushi Gupta, Sudhanshu. Where is Rushita? I think she's absent today. So, Miss Singh, Rajiv Kumar, your answers are correct. Sudhanshu, very good. The correct answer. Diksha Agarwal, correct answer. So, Hetal, your answers are incorrect. I think you have not attended all the sessions. Anyways, when talking about the first point, that is PV ratio, again, the same formula, that is contribution divided by sales into 100. Herein, we can calculate it in per unit also, that is 10 divided by 40 into 100. So that is 25%. Second is break-even sales in rupees. It is fixed cost divided by PV ratio. Again, fixed cost is 12,90,000 divided by my PV ratio, that is 25%. So the answer was 51,60,000. Then the third in units, it is fixed cost divided by contribution per unit. So this is 12,90,000 divided by 10. So this will be 1,29,000 units. Further, when talking about desired sales in units, again the formula is fixed cost plus desired profit divided by contribution per unit. So herein, my fixed cost is 12,90,000. Desired profit is 9 lakh divided by contribution per unit is 10. So this will be 2,19,000. So Hetal, please check your answer. So Rushita, you are present today. Rest everyone correct answer. Kavita, please check your answer. Kavita, the last answer is incorrect. I request you guys to please copy the question and the solution. No worries, Kavita. No need to darshan. These backward calculations are just to make you guys understand the concepts of formulas. But I hope you are thorough with the concept. Yes, I understand if the question is not straight, then no need to apply formula. You can apply the concepts. But this is the best way to present in exams. No worries, Bhumika. That's okay. Your answers are correct. Very good, Rashmi. Your answers are correct. So let's say my selling price per unit is 40. My variable cost per unit is 28. Let's say my fixed cost is 6,24,000. Now you have to calculate the number of units to be sold to earn profit of 20% on sales. You have to calculate the number of units to be sold to earn a profit of 20% on sales. Waiting for your answers, guys. My selling price per unit is 40. My variable cost per unit is 28. My fixed cost is 6,24,000. Calculate the number of units to be sold to earn a profit of 20% on sales. Waiting for your answers. Okay, so I've got answer from Manisha. So this question is a bit on the trickier side. Manisha, your answer is incorrect. Miss Diksha Agarwal, I think your answer is, one second. Try to solve the question. Again, the question is not that tricky. Just apply the concepts. Again, no formula will be applied. So I've got correct answer also from Kavita. Yes, very good, Kavita. Your answer is correct. Rest everyone waiting for your answers, guys. Okay, so Darshan, your answer is correct. Very good. Arunima Sinha, your answer is correct. But I want answer in units rather than rupees. Variable cost is 28, Kavita. Sorry, Manisha. This is 28. So Arunima Sinha. Now it is correct. Yes, Bhumika, Rushita, Dikshita, Farah, Miss Noor Jamila, Hetal Khatri, waiting for your answer. Miduna, waiting for your answer. Okay, so I've got answer from Arunima, correct answer. So Manisha, incorrect answer. Miss Noor Jamila, incorrect answer. Ishan Bist, incorrect answer. Himanshu, correct answer. Sushil Kumar Barik, incorrect answer. Kushi Gupta, incorrect answer. Still, I request you guys, those whose answers were incorrect, I request you guys to please solve it again. I want you guys to calculate the correct answer. Kushi Gupta, incorrect answer. Sushil Kumar Parikh, incorrect answer. Harshita, very good. Your answer is correct. Rashmi Podar, waiting for your answer. Okay, I've got an answer from Vishwanath Reddy. Your answer is incorrect. Siddhi, incorrect answer. Manisha, again incorrect answer. Very good, Arya. Your answer is correct. Ishan Bist, again incorrect answer. Sushil Kumar Barik, 1,86,000 is incorrect. Rashmi Podar, incorrect answer. Bhumika, incorrect answer. Now I think Manisha, this time your answer is correct. Very good, Manisha. Ishan Bist, again incorrect answer. Miss Miduna, let me check. I think you have not posted the answer of the last question, that is question number 3. Yes, still there are many students who are not able to solve the question. Kushi Gupta, incorrect answer. %70 students are not able to solve the question. Very good, Manisha, that you are able to solve the question. Earlier you posted incorrect answer, I think thrice incorrect, 3 times incorrect answer, but now this time your answer is correct. Very good. Ishan, again try. Bhumika, again try. Rashmi Podar, do try. Okay, I think Rashmi Podar, I'm asking for desired sales, not break-even sales, my dear. Sushil Kumar Barik, your answer is incorrect. Siddhi Bhosle, Mr. Reddy, incorrect answer. Kushi Gupta, incorrect answer. Ishan, again incorrect answer. Okay, Sudhanshu Shekhar, again incorrect answer. Diksha Agarwal, incorrect answer. Okay, so Farah Sayyed, incorrect answer, my dear. Miss Noor Jamila, incorrect answer. So let me discuss this question. You have to calculate the number of units to be sold to earn a profit of 20% on sales. So let's say units sold be X. Let's say the units sold be X. So my total sales will be what? 40X. My variable cost will be what? 28X. Therefore, my contribution will be 12X minus my fixed cost is 6,24,000. So this will be so my profit is 20% of sales, that is 20% of 40, that is 8X. So in short, that 12X minus 624 should be equal to 8X. So we can say 4X is equals to 6,24,000, or we can say X is equals to 1,00,000. $56,000. Okay, so Miss Survase, now this time your answer is correct. No worries, Manisha. Very good, Varsha. Your answer is correct. Okay, no worries, Ishan. That's okay. Variable cost was 28 and fixed cost was 6,24,000. Anyone having any doubts in the solution, then you guys can please post your queries. Manish sir, are you there? Manish, the board is visible? Okay. Anyone having any doubts in the solution, then you guys can please post your queries. That's okay, Miss Jamila. Okay, so Varsha Shetty sir, how 8x is calculated? So 8x is what? 40x into 20%. 40x into 20%, that is 20% of sales. So if my sales is 40x, then how much will be my profit? That is 20% of 40x, that is 8x. No worries, that's okay, Mr. Tiwari. Again, this type of question sometimes examiner do ask. So first two questions were only for practice. Okay, let's take one more question. Let's say my fixed cost is 1,80,000. Further, my variable cost is 70% and my margin of safety is, let's say, 40%. You have to calculate actual sales and profit. Anyone else having any doubts in the solution? Then you guys can please post your query. Very good, Sushil. No worries. That's okay, my dear. Even I was surprised that there was a difference of only 1,000 units. So I think you have taken it by mistake. I understand. That's okay, Sushil. Very good. So I repeat again, when talking about fixed cost, it is 1,80,000. My variable cost is 70%. And my margin of safety is 40%. I don't know, Himanshu. Herein I am asking question. So this is the time for you to answer, my dear. I'm not going to answer your query this time. Okay, so Manisha has posted the answer. Let me check, Manisha. The question is that fixed cost is 1,80,000, variable cost is 70%, and margin of safety is 40%. I repeat again, the fixed cost is 1,80,000, variable cost is 70%, margin of safety is 40%. So you have to calculate actual sales and profit. Okay, so I've got correct answer from Manisha. I think Manisha is the first one to answer. Rest everyone waiting for your answers. Again, I repeat, the fixed cost is 1,80,000, variable cost is 70%, margin of safety is 40%. So what will be actual sales and profit? Both the answers are correct, Manisha. Okay, so I've got answer from Himanshu. Both the answers are correct. Very good, Himanshu. Okay, so I've got answer from Diksha Agarwal. Your answer is incorrect. Yes, rest everyone waiting for your answer. I've got answer only from Manisha, Himanshu, and Diksha. Diksha, your answer is incorrect. Okay, Miss Kavita, your answer is incorrect. Arunima Sinha, your answer is correct. Okay, Khushi Gupta, correct answer. Sushil Kumar Barik, this time your answer is incorrect. I repeat, Sushil, the fixed cost is 1,80,000. My variable cost is 70% and margin of safety is 40%. Okay, so Miss Noor Jamila, your answer is correct. Khushi Gupta, correct answer. Arunima, correct answer. Sushil Kumar Barik, still waiting for your answer. Your answer is incorrect. Diksha Agarwal, Kavita, incorrect answers. in rupees only, Ishan, you have to answer. Okay, Darshan, your answers are correct. Both the answers are correct. Varsha Shete, incorrect answer. Both the answers are incorrect. So I've received correct answer from Manisha, Himanshu, Arunima Sinha, Khushi Gupta, very good correct answer. Miss Noor Jamila, Darshan. Yes, Miss Jamila, you have posted correct answer. Okay, Bhumika, incorrect answer. Arunima, both the answers are correct. Yes, Miss Jamila, you are visible. So, Mr. Reddy, Farah Sayyed, Komal Prajapati, waiting for your answers, guys. Bhumika, incorrect answer. Miss Miduna, okay, your sales is correct, but profit is incorrect. I think you have posted by mistake the margin of safety sales. Please check. Harshita, very good, correct answer. Still, I have not received answer from many of the students. That is Varsha, Hare Krishna Tiwari, Miss Surva Se, Farah Sayyed, Sudhanshu Shekhar, Rashmi Podar, Miss Arya, Rushita. Okay. So here in my fixed cost is 1,80,000. My variable cost is 70%. It means my PV ratio will be 30%. So my break-even sales will be 1,80,000 divided by 30%. So this will be 6 lakh. Now, as I told you, actual sales can be divided in two parts, that is break-even sales and margin of safety sales. So my margin of safety sales is 40% of total sales. So it means my break-even sales will be 60%. So 6 lakh is my break-even sales. That is 60% of total sales. So how much will be total sales? Very simple, 10 lakh. So 10 lakh is my total sales. If we want to calculate contribution, we can easily calculate that is 10 lakh into 30%. This will be 3 lakh. My fixed cost is anyways given in the question, that is 1,80,000. So 1,20,000 will be my profit. So again, this question was very easy. The point is that you have to stick to the concepts. Very good, Sushil. Now this time your answer is correct. Again, many students, there are many students who have not posted the answer. In this question. Yes, perfect, Miss Jamila. Ishan, very good, correct answer. So let's take a break of 15 minutes. We'll be back after 15 minutes with two, three more questions. Plus, thereafter, I'll be discussing a concept in relation to PV ratio. So let's take a break of 15 minutes. Welcome back, guys. So there are a few queries. Sir, Varsha, sir, margin of safety is 40% on what? So if in question margin of safety 40% is given or 30% is given, it is of total sales. Komal, again, when talking about the solution of this question, my fixed cost is 1,80,000. My variable cost is 70%. It means my PV ratio will be 30%. So my break-even sales will be 1,80,000 divided by 30%. That is 6 lakh. Now 6 lakh is my break-even sales. Now, as I told you guys, actual sales can be divided in two parts. That is break-even sales and margin of safety sales. If margin of safety sales is 40%, then my break-even sales will be 60%. And my break-even sales as calculated is 6 lakh. That is equals to 60%. So how much will be 100%? That is 10 lakh. So here in my selling price per unit is 40. My variable cost per unit is 24. My fixed cost is 9 lakh. In the year 2023, variable cost per unit is increased by 10%. You are required to calculate break-even sales for 2022 and 2023 in rupees only. Waiting for your answers, guys. You are required to calculate break-even sales in rupees for the year 2022 and 2023. Waiting for your answers. Yes, it is 9 lakh, Varsha. So Himanshu, incorrect answer. Manisha, very good, correct answer. Please check your break-even sales for the year 2023, Himanshu. Okay, so correct answer, Harshita. Rashmi, correct answer. Diksha Agrawal, correct answer. Arunima, correct answer. Arunima, Harshita, Rashmi, and Diksha, everyone correct answer. Himanshu, please check your break-even sales for 2023. Yes, Darshan, Bhumika, waiting for your answers. Okay, Miss Jamila. Sir, question please. So, okay, Anisha, correct answer. Ishan, correct answer. So the question is selling price per unit is 40, variable cost per unit is 24, fixed cost is 9 lakh. So in 2023, variable cost per unit is increased by 10%. You are required to calculate break-even sales for 2022 and 2023. Okay, so correct answer, Miss Miduna. So here in the question is very simple and straight. When talking about 2022 and 2023, the selling price is 40 and 40. My variable cost is 24 and there is an increase in variable cost by 10%. So 24 plus 2.4, that is 26.4. Therefore, my contribution per unit will be 16 and so Mr. Reddy, correct answer. Farah Sayyed, correct answer. Okay, Kushi Gupta, your answer is incorrect. Rashmi Podar, correct answer. So this will be 13.6. So my PV ratio will be 16 divided by 40, that is 40%. This is 34%. My fixed cost is 9 lakh in both the cases. So my break-even sales will be, in the first case, it will be 9 lakh divided by 40%. This will be 22 lakh 50,000. And in the second case, it is 9 lakh divided by 34%. That is 26,47,058. So this is the way you guys have to solve the question. No worries, Himanshu, that's okay. This is the correct way to solve the question. Very good, Bhumika. Okay, one more question for you guys. One more question for you guys. So the PV ratio is 40%. The PV ratio is 40%. Now, if the variable cost of the company per unit of the company is increased by 13.3333%, the required percentage of increase in sales value, the required percentage of increase in sales value to maintain same profit. See, I repeat again, the PV ratio is 40%. Now, if the variable cost per unit of the company is increased by 1/3%, then required percentage of increase in sales value to maintain the same profit. I repeat this question, I'm explaining this question in Hindi also. Currently, the PV ratio is 40%. अब अगर वेरिएबल कॉस्ट पर यूनिट जो है 13.33% से बढ़ जाता है तो सेल्स कितना बढ़ा है कि हम लोगों का प्रॉफिट के ऊपर कोई भी चेंज नहीं है. So waiting for your answer. This question is bit on the trickier side. Similar question is there in the study material. So waiting for your answers, guys. Then also the PV ratio will change, Ishan. We are talking about the change in PV ratio, Ishan. So I repeat again, the PV ratio currently it is 40%. If the variable cost per unit of the company is increased by 13.3333%, that is 13/1/3, the required percentage of increase in sales value to maintain the same profit. Waiting for your answers, guys. Try to solve this question with patience. Again, bit on the trickier sides. No, Vishwanath, your answer is incorrect. Okay, so I've got answer from Diksha Agarwal. Let me check. Himanshu again has posted the answer. I think Himanshu, your answer is correct. I think Himanshu, your answer is correct. Noor Jamila, very good correct answer. Manisha, incorrect answer. Kavita, incorrect answer. Ishan, incorrect answer. Kushi Gupta, incorrect answer. I want every one of you guys to please solve this question. The question is a bit on the trickier side. Examiner do ask this type of questions. Kushi Gupta, incorrect answer. Mr. Sankaran, the answer is incorrect, my dear. You have to mention it in percentage. Anisha, your answer is incorrect. Kushi Gupta, incorrect answer. Okay, so now I've got correct answer. Miss Rashmi Podar, your answer is correct. Very good, Rashmi. So till now, I have got correct answer from Himanshu Pathak. Again, you have not mentioned it in percentage, but yes, your answer is correct. Miss Noor Jamila, your answer is correct. And Rashmi Podar. I've got correct answer from only 3 students till now. Giving you 5 more minutes time. Try to solve the questions with patience. You'll be able to get the answer. Diksha Agarwal, let me check Diksha. Okay, your answer is incorrect, Diksha. Bhumika, again, your answer is also incorrect. Sushil Kumar Barik, again, your answer is incorrect. So the students who are calculating this answer, 8% is incorrect. I've got 8% from many students, but your answers are incorrect. The students who are not been able to post the correct, who have posted incorrect answer, I want you guys to try it again. Okay, so Miss Miduna, again, your answer is incorrect. Manisha, incorrect answer. I appreciate your efforts, but yes, your answer is incorrect. Don't worry if you're getting incorrect answer. I mean, you should learn from your mistakes. So once you, I mean, अगर आप गलती करेंगे तो आप उसको सुधार पाएंगे. So the better it is. If you are doing mistakes, no need to worry. We'll work out together and will rectify all your mistakes. So try to solve all the questions. So Arunima, I've got your answer. Your answer is incorrect. Bhumika, incorrect answer. Manisha, incorrect answer. No need to worry if your answers are incorrect. At least you have tried. I'm happy for it. I'm happy. Yes. Anyone having any answer? Anyone want to post the answers? Still have not got answer from Ms. Singh, Rajiv Kumar, Farah Sayyed, Mr. Reddy, Varshita, Varsha, Komal, Kavita. Arunima, your answer is incorrect, my dear. So now let's start with the solution. Let's assume the sales be 100. So when talking about the current year, if my sales is 100, my variable cost will be how much? 60, and my contribution will be how much? 40. So this is my contribution in the current year. Now, after increase, let's say variable, after increase, what will be the situation? So in this case, if the variable cost is increased by 13.33%, my sales will remain same. Let's say my sales selling price is 100, but my revised variable cost will be how much? That is 60 plus 13 point. So this will be 34. My revised. So this will be, sorry, 68. So my contribution will be 32. So now my revised PV ratio will be what? 32%. Now, I am saving 32% of the total sales and my profit expectation is what? 40. Again, I repeat, the question has clearly mentioned that the required of increase in sales value to maintain the same profit. See, fixed cost is irrelevant in this case. We want to earn at least 40 rupees contribution. So for earning 40 contribution, how much sales is required? Because my revised PV ratio is 32%. So 40 divided by 32%, that is 125. So my revised sales will be how much? 125. That is from 100 to 125. That is 25% increase. This time, Manisha, very good, Manisha. Your answer is correct. So I repeat again. When talking about this question, let's assume that my sales is 100. So currently I'm earning how much? 40. Or with 100 sales, currently I'm earning 40. Now, if the variable cost is increased by 13%, 13.33%, my revised variable cost will be 68 and my revised PV ratio will be how much? 32. So to earn the same amount of contribution, how much sales is required? 40 divided by 32%, that is 125. So it means if we increase the sales volume by 25%, if we increase the sales volume by 25%, we can achieve the same amount of profit as we were getting earlier. I request you guys to please copy the explanation. I wish I could give you 2-3 more questions, but I have to cover one more concept. So giving you 2 minutes time to please copy the explanation. I hope, Kavita, your query is resolved. Bhumika, I hope this concept is clear. Sushil Kumar, Arunima, Sankaran, please do copy. Again, if I'm saying that this is the see herein, when talking about, we have to calculate the sales wherein we earn the same amount of profit. So if at the current sales my PV ratio will be 32%, it means with the same sales, then and if my PV ratio is revised, then herein with the same sales we will be earning 32% of the total sales. So if we increase the same, if we want to earn the same amount of profit, then yes, we have to increase the sales. Let me discuss this again with the help of, let me revise the concept. Let's say, let me explain this in a better way. Let's say the units sold be 100 and the 100 and the selling price is 10. So in current year, my sales will be 1000. My variable cost will be how much? 6000, and my contribution will be how much? 4000. Now, after increase, if we continue to sell the same amount of units, then 100 into 10, that is 1000 rupees will be my sales. If we continue to sell the same amount of units, that is 100 into 10, my sales will be 1000. However, my variable cost will be how much? 100 into 6 plus 100 into 6 plus 13.33%. This will be 6.78. this will be 680, and this will be 320. So herein, my revised PV ratio will be how much? That is 10 minus 6.8, that is 3.2, that is 32%. So herein, we are not earning the same profit. Why? Because there is a change in variable cost, that is variable cost is increased from 6 to 6.8. So to earn the same amount of profit, we have to increase the number of units. So my desired profit is how much? 4,000 divided by my revised PV ratio, that is 32%. So 4,000 divided by 32%, my revised sale should be 12,500. That is, we can say we cannot increase the sales price, but yes, we can increase the number of units from 100 to 125. Sorry, 1250. So we cannot increase the number of, we cannot increase the selling price. So to maintain the same amount of profit, we have to increase the number of units. So the increasing number of units will be how much? From 100 to 125, that is 25%. I hope now this concept is clear to all. Sorry guys, the mistake of 0. So I hope this part is clear, wherein, let's say my units sold are 100 and the selling price is 10. So currently my sales is 1,000. My variable cost will be 600 and my contribution will be 400, since my PV ratio is 40%. Now let's take a situation wherein the variable cost is increased from 6 to 6.8. So my sales will remain same. My variable cost will be 680 and my contribution will be 320. So my revised PV ratio will be 32%. So herein, to earn the same amount of profit, that is 400, we have to increase the number of units from 100 to 125 to achieve the same amount of profit. In previous question, it is increased. There is an increase in variable cost. See, if the variable cost of the company is increased by 13.33%, the percentage increase in sales value, that is in sales units, to maintain the same amount of profit, Ishan. Six plus 13.3333%, Khushi Gupta, you will get 6.8. So enough of discussion on this question, guys. I hope this part is clear to all. Krishna, Sushil. We have to calculate the increased sales, Sushil Kumar Barik. So if we keep the same number of units, we'll be getting a profit of 320. That is much less than what we are expecting. So to get the same amount of profit, we have to increase the number of units. That is, my sales in units should increase by 25% to offset the increase in variable cost. So enough of discussion on the basic questions. Now let's start with one more concept, wherein if two period figures are given, let's say my sales is 1 lakh and 2 lakh, and my profit is, let's say, 30,000 and 70,000. I repeat again, here in my sales is given, that is 1 lakh and 2 lakh for the 2 years. And there is a change in profit from 30,000 to 70,000. Now we want to calculate the PV ratio. So When talking about the change in profit, it represents the change in contribution because fixed cost remains same. So herein, the change in contribution is how much? The change in contribution, or we can say change in profit, is how much? Very simple. That is 40,000. And here the change in sales is 1 lakh. So we can say my PV ratio is how much? 40%. In simple terms, if the two period figures are given, the formula to calculate PV ratio is change in profit divided by change in sales into 100. So when talking about change in profit, it shows the change in contribution. So herein, that is why we are applying this formula, that is change in profit divided by change in sales into 100. So herein my change in profit is how much? 70,000 minus 30,000, that is 40,000. My change in sales is how much? 2 lakh minus 1 lakh, that is 1 lakh, into 100, that is 40%. So herein, once the PV ratio is calculated, we can easily calculate the fixed cost also. So my sales is 1 lakh and 2 lakh. My variable cost will be 60%, that is 60,000 and 1,20,000. Therefore, my contribution will be how much? 40,000 and 80,000. Fixed cost is not given, however, profit is given. And my profit is 30,000 and 70,000. So this will be 10,000. And the fixed cost is same, that is 10. If you guys have any doubts in this part, you guys can please post your queries. So if the two period figures are given, when talking about how to calculate PV ratio, the concept is very simple, wherein change in profit divided by change in sales into 100. I request you guys to please copy this explanation. Anyone having any doubts? Krishna, Himanshu, Bhumika, Varsha, Ishan, Darshan, Manisha, Rushita, any doubts? Rashmi, Arya. So now a question for you guys. Let's say my sales is 1 lakh and 2,20,000. Further, my profit is 15,000 and 25,000. You have to calculate PV ratio. Yes, Himanshu. Sushil, hopefully your query is resolved of the last question. So waiting for your answers, guys. The sales in 2022 is 1 lakh and in 2023 it is 2,40,000, not 2 lakh. It is 2,40,000. The sales in 2022 is 2 lakh and in 2023 it is 2,40,000. And the profit is 15 and 25. The change in sales, I know it is 1,40,000. What will be the PV ratio and what will be the change in profit? Waiting for your answers. Varsha, in the first year, there is a loss of 15,000 and in second year, there is a profit of 25,000. Okay, so I've got correct answer from Manisha. Rajesh, please post the complete answer. Khushbu Goyal, your answer is incorrect. Himanshu Pathak, your answer is correct. So Mr. Sushil Kumar, please check. It is 2,40,000, not 2,20,000. Kavita, correct answer. Khushbu Goyal, your answer is incorrect. Sushil Kumar, it is not 2,20,000, it is 2,40,000. Komal Prajapati, incorrect answer. Bhumika, incorrect answer. I repeat again, guys, the sales is 1 lakh and 2,40,000. The profit is 15,000 and 15,000 is the loss and 25,000 is the total profit. So I've got answers from Manisha. First, your answer was incorrect. Noor Jamila, please post the complete answer. Komal, incorrect answer. Anisha, correct answer. Arunima, incorrect answer. Rajesh, again, please do post the answer in decimals. So, else, incorrect answer. Manisha, very good. Now, this time it is correct. Khushbu Goyal, it is incorrect. Himanshu, correct. Sushil Kumar, please check the question again. Kavita, your answer is correct. Bhumika, incorrect answer. Arunima, correct answer this time. Sankaran, correct answer. Okay, so Khushbu Goyal, again incorrect answer. Rashmi Podar, incorrect answer. Miss Miduna, correct answer. Very good, Miduna. Yes, Komal, waiting for your answer. Varsha, waiting for your answer, my dear. Okay, so Rushita Sharma, now this time your answer is correct. Bhumika, correct answer. Noor Zamila, correct answer. Anisha, correct answer. Sushil, correct answer. So now Rashmi Podar, again incorrect answer. I'll be giving you a question for the same. There is a query from Miss Noor Jamila sir. If by any chance in selling price or variable cost per unit got changed, what will be the solution? I'll be giving you a question. So Hetal Khatri, incorrect answer. Rajesh, correct answer. Varsha, incorrect answer. So when talking about the change in profit, in the first year, there is a loss of 15,000. And in the second year, there is a profit of 25,000. So the change between first year and second year is how much? 15 to 0 and 0 to 25. That is, the change is 40,000, not 10,000. Alternatively, we can say 25,000 minus 15,000. That is also in negative. So this will be 40,000 divided by 1,40,000 into 100. So this is 28.57%. This is the correct answer. Varsha, please check your answer. Your answer is incorrect. Very good, Komal. Now this time your answer is correct. Okay, one more question for you guys. Anyone having any doubts? Herein, when talking about the change in profit, the change in profit is of 40,000, not 10,000. Because in the first year, there was a loss of 15,000. And in the second year, there is a profit of 25. So when talking about the change in first year and second year, it is 40,000, not 10,000. Let's start with the next question. Let's say my sales is 2 lakh and 4 lakh. Further, let's say my total cost is 1,20,000 and 2,70,000, you have to calculate PV ratio. Waiting for your answers, guys. Herein, my sales is given, that is 2 lakh and 4 lakh. The total cost is given, that is 1,20,000 and 2,70,000. You are required to calculate the PV ratio. Okay, so I've got answer from Manisha. Very good, Manisha. Your answer is correct. Komal Prajapati, incorrect answer, my dear. Miss Miduna, yes, very good. Your answer is correct. Waiting for your answers, guys. So I have received answer from Miduna, correct answer. Komal, incorrect answer. Manisha, correct answer. Okay, so now Rajesh, Noor Jamila, Himanshu, Arunima, Anisha, everyone correct answer. So herein, the formula is very simple. That is change in profit divided by change in sales into 100. So herein I have the total cost. So my profit will be 2 lakh minus 120, that is 80,000. And in second case, my profit will be 1,30,000. So herein my PV ratio will be change in profit, that is 50,000, divided by change in sales, that is 2 lakh into 100. So this will be 25%. Anyone having any doubts, queries? So a question for all of you guys. There is a question for all of you, and it is a homework for you guys. A manufacturer produces 2 lakh units of a product at a cost of rupees 4.5 per unit. A manufacturer produces 2 lakh unit of a product at a cost of 4.5 per unit. Later on, he produces 3,50,000 units. Later on, he produces 3,50,000 units at a cost of 4.2 per unit. When its fixed overhead has decreased by 30%. You are required to calculate variable cost per unit and fixed cost. I repeat again, a manufacturer produces 2 lakh units of a product at a cost of rupees 4.5 per unit. Later on, he produces 3,50,000 units at a cost of 4.2 per unit, at a cost of 4.2 per unit, when its fixed overheads are decreased by 30%. You are required to calculate variable cost per unit and fixed cost per unit, fixed cost in aggregate. A hint from my side, variable cost per unit we can calculate as change in total cost divided by change in units. Again, this is not the formula, it's a simple concept. Herein the fixed cost remains same. So if there is any change in cost due to change in unit, that will be the variable cost per unit. So this is the hint from my side. I request you guys to please copy the question, and I want correct answer. The similar question is not there in any study material or practice manual. So I request you guys to please copy the question. A manufacturer produces 2 lakh units of a product at a cost of 4.5 rupees per unit. Later on, he produces 3,50,000 units at a cost of 4.2 per unit. When its fixed overhead decreased by 30%, you are required to calculate the variable cost per unit and the total fixed cost. So this is the homework for you guys. Again, the question is not that easy. It's bit on the trickier side. So थोड़ा दिमाग लगाइए, क्या करना चाहिए, do necessary research and be ready with the answer for the next session, in the next session. So, okay, so Sushil Kumar Barik, I'm reading the question for you. A manufacturer produces 2 lakh units of a product at a cost of 4.5 per unit. Later on, he produces 3,50,000 units at a cost of 4.2 rupees per unit when its fixed cost or fixed overheads decreased by 30%. Decreased by 30%. You are required to calculate variable cost per unit and the total fixed cost. So I hope this part is clear to all. In today's session, we completed the basic concepts of marginal costing. In the coming 2 sessions, we'll be discussing the questions of relating to decision making. Very good, Himanshu. Your answer is correct. But let everyone solve this question. And do post your explanation also, Himanshu. Do post your explanation in the next session, how you calculated these values. So guys, thank you so much for your time and patience. That's it for the day. Again, do revise what I have discussed in this session. Do try to solve all the questions, what I have discussed in this session. Plus try to solve few questions of study material and past practice manual. You will be able to, if you are thorough with the concepts, and be ready with the answer of this question in the next session, along with the explanation. Yes, Manisha, thank you so much. So thank you so much, guys, for your time and patience and for active participation in the session. Again, I appreciate your efforts. I understand कुछ students के answers correct नहीं आए थे. No need to worry. अगर आप गलती करोगे तभी आप गलती से सीखोगे. So no need to worry that your answers are coming wrong or anything like that. Have some try to solve each and every. Try to read the question patiently and apply your concept. Yes, you have to keep refreshing your concept for better understanding of this chapter. So do revise what I have discussed till now. Till then, enjoy your day. Thank you so much, guys.